crypto has declines, and we're not necessarily in a bear market, and it feels terrible. In fact, that's what you have to be mindful of, is that it's a hyper volatile space. So it feels terrible now, but just like in 2024, crypto felt terrible for many months, and then we've had these big moves. What is Bitcoin? I think everyone really accepts it as it's a store of value, a really good way to store value, and that's accepted today. In fact, someone might say that's like a Lindy effect, that people believe that. When we first started writing about Bitcoin in 2017, and digital gold was one way to sort of argue Bitcoin's value, it was not accepted. So, but of course, all those arguments fell away.
In his opening remarks, Tom Lee emphasizes that markets are constantly evolving ahead of the news. The smart money is already planning for the future, while the majority of investors are still attempting to understand the most recent economic news. Lee claims that the current climate is about a change in momentum that many people are ignoring rather than just dread or uncertainty. In the past, markets start laying the groundwork for the next significant upward move when pessimism hits extreme levels. And he thinks that's precisely what's taking place at the moment. Lee notes that liquidity is the primary force behind this possible change. One factor unites all significant stock and cryptocurrency bull markets: a shift in the state of the economy. Capital starts looking for growth once more as inflation pressures gradually lessen and the Federal Reserve gets closer to shifting its position. At that point, riskier assets like Bitcoin and tech stocks typically react first. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Crypto was the first really to sniff out, and it's going to be responding to a Fed, right? And if the Fed remains hawkish and executes policy error, that's bad for crypto prices. That's why it's really important for anyone involved in crypto to understand that what the Fed's going to do is a big deal. I think the Fed is in a very difficult spot, because if there wasn't what looks to be as political interference, I think the Fed would be cutting without question now, because bond market is showing future inflation expectations are falling, and that means that if monetary policy doesn't adjust, its real rates are getting tighter. We're actually putting more tightening into the economy. But as you know, the Fed has to make sure its actions don't look like they've been politically driven.
Yeah.
And that, not just the market's perception, right? Because people tend to think of it as, oh, well, this is the bond market or stock market's conclusion. That's not really what I think that what the Fed's concerned about. It's really the integrity of the organization. They have 30,000 or more employees, and each of them is seeing this relentless attack from the White House. So I think to the extent that the Fed governors and the voting members know that it's the morale of the institution that's at stake. So this is why the Fed is even more guarded in their actions and much more deliberate in their messaging, because they don't want anything they do to look politically motivated. And unfortunately, that's been bad for markets, because the markets have interpreted that as the Fed is hawkish. And I mean, they do sound hawkish. So I think it means that there's going to be an alignment in later months when inflation is fallen enough and the Fed can now make cuts where it's no longer viewed as politically motivated. Ethereum and Bitcoin are public tokens. And so their price isn't going to be purely anchored on fundamentals. They're going to be reflecting investors' perceptions, because both Bitcoin and Ethereum are not mature platforms. Their best utility and growth and innovation are in the years ahead, right? So we're 10 years in, but there's more growth in the future. The percentage of market share of crypto of total assets is so small that we know that mathematically that's true. Whenever when you have something that has a hyper growth on ramp and you're discounting the future, it's going to be very volatile. So does Ethereum's price going from 4,800 to 2,800, I mean, that is a staggering decline, but that probably is a minor change in 2030 fundamentals that is being priced and repriced by investors. And that's why there's hyper volatility. It's one reason why BitMine ended up engaging Tom DeMark as a strategic advisor, because he is the king of sort of price discovery. You know, he is the father of systematic timing. And in our conversations, when he looks at Ethereum, he sees what looks like engineered or systematic liquidation taking place. So there is someone that is in crypto, we know it's, you know, market makers play a big role, but there is someone that is probably capital constrained and is therefore bleeding or having to sell reflexively as price falls. That process is painful, but in his sort of rough timing range, his downside target, and you know, we talked about this a few weeks ago, was 2,500 for ETH. So I think we're so close to that. It would be ideal actually for us to actually bleed to that level, because then that is creating what he calls a buy setup. You know, a bottom in prices for him is when the last seller has sold, so that a stock or crypto no longer falls on bad news. I mean, that's what he thinks makes a bottom. So it would, I think, be a better situation to see crypto prices bleed lower to 2,500. But it could reverse at any time, and because markets don't have to do what ends up being an ideal scenario. Crypto has declines, and we're not necessarily in a bear market, and it feels terrible. In fact, that's what you have to be mindful of, is that it's a hyper volatile space. So it feels terrible now, but just like in 2024, crypto felt terrible for many months, and then we've had these big moves.
Furthermore, Tom Lee highlights the complete tokenization of assets, which he believes will be the most financial innovation of the upcoming 10 years. This basically entails converting conventional assets like stocks, bonds, and real estate into instantaneous digital tokens. Stablecoins are an obvious example of how the dollar is already headed in this direction. Even though they employ significantly fewer people, businesses like Tether are becoming valuable enough to compete with the biggest banks in the world. In the future, Lee believes that over 70% of innovation worldwide would be digital native. The liquidity issues that have long limited traditional finance will be resolved by software-driven systems, and markets will trade continuously. This change will have an equally revolutionary effect as the transition from paper letters to instantaneous digital communication. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
Yeah, I think, well, in the near term, you know, there is downside, maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter. What is Bitcoin? I think everyone really accepts it as it's a store of value, a really good way to store value, and that's accepted today. In fact, someone might say that's like a Lindy effect, that people believe that. When we first started writing about Bitcoin in 2017, and digital gold was one way to sort of argue Bitcoin's value, it was not accepted because many people said, well, come on, I mean, it's just code. I mean, how can code store value? Or why can't there be 100 Bitcoins? Or look, I could create a new Bitcoin tomorrow, or I could fork Bitcoin and create a new Bitcoin, or I can't buy. I remember one client saying they couldn't buy a bottle of water with Bitcoin, so how could it even be valuable? So, but of course, all those arguments fell away. And now we have digital gold, Bitcoin, store of value. Even as gold gets tokenized, which I think will compete with Bitcoin to an extent, you still have Bitcoin, which is a really good way to store and transfer value. But Wall Street is also understanding there are a lot of virtues to a blockchain. And it's the ability to not only store value, but to store information and to actually transact and conduct and actually re-architect almost everything that Wall Street does. But they need a smart contract platform. And so that's where all these other L1s start to become a lot more important to Wall Street's future. Because if the big banks, the blue chips, build stable coins and they're going to tokenize stocks and let stocks trade 24/7, and then innovate that too, which I discussed at the Cantor, which is like things like factorize a stock. So no, just like in the bond market where you can factor a bond, we can factor Tesla so that you're only buying the implied future value of Optimus Prime. So instead of asking Tesla to make itself a tracking stock, you can synthetically create that on the blockchain. So you can't really do that on Bitcoin. So you have to build it on a smart contract, L1 or L2. And the reason I think Ethereum is going to be one of the leading platforms is, number one, its sheer size. It is by far much bigger than the number 2 or number 3 L1s. It has a huge and growing developer community that is really dedicated, and it's global. So I think it's a true, robust community with actual known values. And it's a neutral blockchain with 100% uptime. So I think that this becomes one place where it's going to be easier for people to create innovative products. So for instance, let's say JP Morgan or Goldman want to just do tokenized stocks in 24/7. And they want to control as much of that as they want, as they can on a blockchain, because you lose a bit of control. They may not necessarily say they want to do a lot of this on Ethereum, but then someone's going to come along and create a product that does do this, and it's supported by a community, and then it gathers all the liquidity. That's exactly what happened with something like Polymarket, right? On a prediction market basis, where it came natively out of the blockchain and today broke out into the real world and it's the most cited way to actually understand events in the future. I mean, the Polymarket is the closest to having a crystal ball today. Like, it is the closest to tomorrow's newspaper, and it's a native blockchain product. It didn't come out of an existing Wall Street desk that created this product. It was created by builders. So that's why I think Ethereum, and it doesn't have to be only Ethereum succeeding. I think Ethereum, there'll be room for others, but I can see the clearest roadmap for Ethereum succeeding.
Yeah, on Polymarket, man, I've been watching it like crazy. It's just such good information to have.
Tom Lee concludes by emphasizing the complete digital transformation of assets and markets, which he believes will be the next significant development in finance. He starts out by describing how Bitcoin has gained notoriety as a store of wealth and a type of digital gold. Its early detractors claimed it was just code, that it couldn't be used in real-world transactions, or that it was simple to copy. But those criticisms have mostly vanished. Nowadays, most people agree that Bitcoin is a trustworthy method of transferring and storing money. Wall Street is beginning to recognize the wider potential of blockchain technology, which goes beyond simply keeping cash to include information storage, transaction facilitation, and the redesigning of entire financial systems. While Bitcoin is a great store of wealth, Lee notes that more sophisticated advances like tokenizing equities or developing programmable financial instruments call for smart contract platforms like Ethereum. These platforms enable fractionalization, round-the-clock trading, and transformation of assets in ways that are not possible on traditional markets. Lee highlights that the tendency of tokenization is only getting faster, even though they only employ a small portion of their workforce. Stablecoins like Tether already represent digital dollars, and these platforms are rising to valuations comparable to some of the biggest institutions in the world. In the same way, the communications and media have gone digital over the past few decades. He believes that at least 70% of global innovation will be digitally native over the next 10 years. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.